Good afternoon, everybody. It's going to be our Summary of Markets episode 173. As always, we're going to start off with the calendar, then we'll talk about ES, NASDAQ, Bitcoin, Ethereum. We'll move into oil and then close it up with the dollar and the euro. So starting off with the calendar here, as you can see with all the red, there's a lot of high impact data coming out this week. So we do have to watch out for quite a few things here. So the first thing to watch out for is Monday. We have the 10-year bond auction coming out at 1 p.m. That typically has some impact within the first like 5-10 minutes of it coming out, and then it kind of dies out. So there's not much to look for, but just be careful around 1 p.m. on Monday. So starting with the high impact on Tuesday, we have CPI coming out at 8:30 in the morning. So watch out for that. That's definitely going to impact the dollar and also ES. The correlation has been coming back, which we'll talk about towards the end of the video. But the correlation with the dollar and ES has been slowly coming back. So this week could be pretty detrimental on ES if this data comes out bearishly. So moving on to Wednesday, we have the PPI coming out at 8:30, and then we have the big Fed meeting on 2 p.m. So this is the Fed report. This is the Fed meeting that should be stopping the rate hikes. We should have a rate pause. Let me actually take a look at the probabilities really quick. Let's pull that up so you guys can see it. And we can look at the probabilities for the rate pause. So right now it's sitting at 70% probability of a rate pause, and then we have about a 30% probability of a possible 25 basis point hike. So very likely we are going to see that rate pause. So because the market is pricing in that rate pause at 70%, if we see a 25 basis point rate hike here, that could be pretty bearish. So make sure you watch out for that. We really want to see it come in at 5.25. We do not want to see 5.5. So that will be happening at 2 p.m. Then the press conference at 2:30. Moving on to Thursday, we have retail sales coming out at 8:30, manufacturing index, and unemployment, Philly Fed index. So we got a bunch of things happening at 8:30 pre-market on Thursday. Moving into 9:15, we have industrial production and business inventories at 10 o'clock. Moving on to Friday, we have a Fed talk at 7:45 in the morning. That's going to be pre-market, obviously. And then we have consumer sentiment and inflation expectations at 10 p.m. So quite a busy week. The biggest thing you have to watch out for is that Fed meeting on Wednesday. So definitely watch out for that. CPI and PPI are pretty high impact as well. So it's going to be a busy week. Just be careful trading around those times, and you should be all right. All right, moving on to ES. So we did have the rollover last week. Typically, I do not trade the new contract, the rollover contract, until about Tuesday or Wednesday. But because we have that FOMC this week, I don't want to switch contracts in the middle of the week. So we're going to start trading the new contract as of tomorrow. So we're going to do all of our analysis on the continuous contract. If you guys are using the newest contract, I believe it is the September contract. So if you just use the continuous contract, it will make sure you're using the newest one. But I believe it's September. So we're going to go ahead and roll over. So we're going to do all of our analysis on the continuous. All right, so starting off like we always do, we are going to grab our weekly profile. It's going to look a little weird because of the rollover gap. That's okay. 1, 2, 3, 4, 5, going back to Monday here. Yeah, so as you see, big gap there. So let's go ahead and mark this out. It's not going to be as helpful this week, obviously, because it's the rollover week. These levels are a little off, I guess is the best way to put it. The gap is really breaking a lot of these levels. Okay, so we have the weekly value area. Let's go ahead and mark these levels out. And then let's mark out, we have the gap marked. Let's bring that back actually. And let's mark out the section that has not seen any trading. So it's basically that section right there. And we'll just mark that as like a teal so we know it's just a gap there. Okay, so we have our weekly value area way down here around 95 to 73, and we have that gap trading from 43.27 down to 43.06. If we look for the actual gap, it goes all the way down to 42.98. Okay, so keep an eye on that. That will most likely be filled next week. I mean, hopefully it's filled next week. We really do not want to leave this gap open and go for a big run here. So we want to lean slightly bearish going into all that data. All right, let's mark out a few more levels here. We have the weekly high trading at 69.50. If we can break that, we have an old level at 77 to 78. And then realistically, we don't have a major level until 44.50. So we've got some room to run there. If we look at the daily, you can see why we don't have any major levels kind of in between those two. It's because we're breaking out of this extremely long, almost a year, I think over a year actually, accumulation. So we're entering local price discovery, obviously not actual price discovery because we have price above us, but we have local price discovery. We have not hit these levels in a very long time. So we went ahead and marked out the value area of this accumulation here, or distribution, whatever you want to call it, that range. And that is going to give us these three levels. So if we can get back above that value area into 43.77, the POC of that area is 44.50, and the value area high is 45.34. Obviously, these are pretty macro levels. That's going to be about a 200 point to 150 point move. So for scalping, we just have to take it day by day. Okay. All right. So if we start holding below 43.27, I would lean bearish into that complete gap fill down to 42.98 and possibly even down to 42.73 if that data continues to come out bearishly. If the data comes out bullishly and we start ignoring this gap here, once again, look for 43.77 and then just take it day by day, watching the delta, etc. We'll talk about that on our live streams. All right, moving on to NASDAQ. Let's go ahead and get rid of all these old levels and we'll start fresh here. Let's go ahead and grab our weekly profile, 1, 2, 3, 4, 5, going back to Monday. So this one doesn't look as weird as ES because you have price action inside where that gap was. So these levels are actually more effective than the ES levels. Make sure we mark out the POC as well. We'll go ahead and get rid of that. Let's bring back our levels here and let's go ahead and mark out exactly where that gap is. One thing I forgot to mention, we do want to mark out the weekly open, but obviously that's going to happen later today, so we can't go ahead and mark that yet. But on Monday, make sure you mark out the weekly open because we are coming into an FOMC week. All right, let's go ahead and mark this as a gap, and then let's figure out where the price has not traded. So it's basically from here to here is where that gap has not traded. So we'll keep an eye on that. Basically treat that as like a single print zone. All right, let's go ahead and mark out some upper levels here. We have the weekly high, and then we're going to have to zoom out pretty far because once again, we're in local price discovery. So let's go to the daily here and let's find some old levels. So we can go ahead and mark out this little high right there. And then let's go ahead and grab the value of this zone right here. So it looks like the value area low is there. Value area, or sorry, the POC is right there. And the value area high is just before the high. And we can go ahead and get rid of that volume profile. Let's go ahead and reset. And now we have some targets above us. So basically the same thing that we said earlier. This is going to be a very wide range because it is on a daily. So for the scalping terms, you do want to take it day by day. and find those levels based on your pre-market and your cash profiles. So looking at this right now, 886, get above that level. We are going into a value retrace into 1583 and then 15218. I believe that's about a 2 to 3% move. Yeah, about 2.25. So we do have some room to run. Same thing that we said on ES, you do want to lean slightly bearish until that gap is filled. So if we do have that data coming out, if it comes out bearishly, you want to look for that gap around 14,520. One thing we didn't mention with ES, but it can be said for NASDAQ as well. These daily gaps that you can see on the futures indexes, mainly ES and NASDAQ, they have a 100% or near 100% fill rate. So we know they are going to get filled. The problem is, when are they going to get filled? Most of the time, they get filled within a week. But we have seen some of these gaps. Take the Good Friday gap. I think it was 2021 to 2022. It gapped up on Good Friday because of the holiday, and it took over a year until after the next Good Friday to fill that gap. It was filled, but it took over a year to do so. So we know these gaps will be filled. The hard question is when. So we're going to aim for that gap fill next week. We're going to hope it gets filled next week. If it doesn't get filled next week, you don't want to be just always bearish. You don't want to turn into a perma bear because you have that gap. You want to look for signals that could trigger you into targeting that gap, but you don't want to be a perma bear just because that gap is open. I will say next week, you do want to lean bearish, but after that, if it's not filled, just ignore it until we come back and get relatively close to it. All right, moving on to Bitcoin here. Bitcoin's still in that bearish channel. I know we have a lot of lines here. It's a little confusing, but overall, we are in a bearish channel, putting in lower highs, lower lows. So you're just in a bearish trend. We are losing this distribution. Pay attention to this distribution right here. You have the highs there and the lows there. So we are losing that distribution. We lost it last week, and it looks like we're selling off a little bit after losing it. The next major support would be around 24.9 and then 23.9. So if we can't get back above 26.5, look for these lower supports, which would also be close to the lower channel, the channel low. If you do get back above that distribution low, you do have a little bit of resistance, or I'd say a lot of resistance on that channel high and the middle of the range, all lining up around 23.5 to 27.5 to 27.7. So a lot of resistance, even if we do look slightly bullish next week. So be very careful being a bull on Bitcoin. All right, moving on to Ethereum here. Ethereum also looking pretty weak. We lost the range high there, still putting in lower highs, and we are putting in a lower low now. So looking pretty weak. It's very choppy. It's not giving you a really clean trend, but it is definitely leaning bearish. Let's go ahead and mark out. Let's see if we can find a good connection for these levels. Not the best. Honestly, you would probably want to connect it from here to here if you were looking at somewhat of a channel. It's not really a great channel, so I wouldn't pay too much attention to that trend line. But if you guys are trend traders, just understand that it's pretty bearish as long as we're putting in lower highs below, I would say 1850 to 1900. If we're still putting in lower highs below that level, you do want to be looking for lower lows. So in this case, possibly sweeping the 1680 or even lower, possibly down to that level, which is, let's go ahead and mark that out. That would be around 1617. So possibly looking for a lower low into 1680 or 1617 if that level, if that trend, I should say, is not broken. All right, moving on to oil here. Oil is still sitting on this old range low. You can see where we found support there. You kind of swept it there and got really aggressive back to the upside. Once again, sweeping it. There's a lot of price action trading around this level. If we grab a volume profile, it'll make it a little bit more obvious. That's kind of where our value area low is. So anything below 72 to 70 is looking pretty bearish. You have a little bit of support. You can see the node right here around 69.25. Once you break that, possibly going to come down to 66, maybe even 62. The 66 level has been taken a few times. You can see we swept it there and there, but it has held both times. So you had 4 tests there, 4 wicks, and then you had another wick there. So that 66 level, even though it's not acting as an exact level, you are not seeing a single daily close below that level. So if we do start to lose 70, probably will come down to 66, but look for some buy pressure around that area. If we can reclaim the value area low, which is above 72, possibly going to come back towards the range POC, which is around 78. There's a lot of headlines going around with OPEC, so definitely keep an eye on those headlines. All right, going into the dollar here. This is what we were talking about in the beginning of the video. The correlation is coming back very slowly, but it is currently negative 0.7, which is kind of where it starts to get a tradable correlation. We look for any correlations that are above 0.7 or below negative 0.7. So this is a decent inverse correlation. It will most likely only get stronger with all of that major news coming out this week. So keep an eye on that correlation. It will most likely be pretty strong and it will be inverse. So if the dollar is nuking, that will be pretty bullish for ES. And if the dollar is going up, that will be pretty bearish for ES. Okay. So keep an eye on that. The correlation is definitely coming back. Let's mark out a few levels here. You want to look for this previous high right here. We kind of had a sweep there. You can see how it resisted it, but then we had a break above it, and then we came back below it. So obviously a clear resistance. That is around 103.5. If we can break that level with all the news, oh, sorry, this is on the 5-minute, excuse me. Let's go to the daily here. That did look a little strange for a second. Here we go. Okay, these are the levels we want to watch. Excuse me. I was wondering why it looked so strange. All right, here we go. The level we want to watch is actually 104.7. If we can hold above this 200 EMA and break this little downtrend, you can see these wicks. Look at these wicks. Lower highs on every single daily, pretty much. If we can break that lower high structure, you can put a trend line there if you want to, but realistically, it's a really small trend. But what you want to look for is any higher high above that trend. So I would say probably above 104.3, 104.5, we could get slightly bullish on the dollar into 104.7 and 105. If we continue to hold below this low here, I'd say below 103.4, you're going to keep maintaining this bearish trend. Right now, it is just a bear flag. It doesn't look extremely bearish. What you could do is you could grab a fib here, and we can see it's right on the 382. So 382 is not that bearish. Let's put this on dark background there. If we start breaking that 382, we have the 50% retracement at 102.8, and 102.4 would be the 618. So that would be what we consider the buy zone, the bullish buy zone. If we can get back down here, they could possibly find some buy pressure out of that zone. So obviously making all these predictions right now based on technicals is not going to help us too much because we have so much high impact data coming out this week. We really just want to see how it reacts to that data. But look at these major levels when that data comes out. So make sure to watch out for 104.4, 102.8, and 102.4. All right, moving on to the euro here. Let's mark out some levels as well. We're going to mark out this low right here, which is around 106.4. And let's say I like this level here, this little support and resistance flip around 107.8. So we are trying to break this trend. You can see we're very slightly putting in a higher high here. So it tried to maintain that low, and now we are putting in a very small higher high. So if we can break one of these previous levels, this previous low or that previous high, we could really start to break this downtrend. Right now, we are breaking the downtrend, but it's breaking it with an accumulation. It's not actually breaking it with a nice reversal into an uptrend. You're just kind of breaking it based on a consolidation here. So if we can actually start to break this with a nice uptrend, maybe put in a higher low, and a higher high, this starts to look very bullish. So I would say if we can put in a higher high above 108.6 or even locally above 108, it's starting to look pretty bullish. If not, this will most likely hold as a support and resistance flip, and we will be putting in a lower low around 106.4 to 0.2. If the data coming out this week is very bullish for the dollar, then most likely the euro will be breaking that low. But all right, guys, that was the summary of markets. Hopefully you guys enjoyed this video. I will be streaming this week, Monday through Friday at our normal schedule, but I will be trying to start a little early. So most likely we will be starting around 9:15 to 9:20, just so we can get our trade plan out before the daily open. I know a few of you guys have said that in chat that you would like to see the trade plan kind of before the bell. So we're going to try to start our streams a little early this week. We're going to try to start around 9:15 to 9:20. So look out for the live streams around that time. If you guys like this video, make sure that like button does help a lot on YouTube. And I will be seeing you guys tomorrow for our live stream. Have a good rest of your weekend.